Ladies and gentlemen, Joshua Salvetti, welcome to the High Performance Trader. So the purpose of this video, right, is to break down simplicity, right? Trading is a very unstructured environment, right? We have tons of decisions that we could either make or not make, right? We got all these different conditions and environmental information, right, that we need to adapt to, right? Because buyers and sellers are constantly battling over price, right? And though analysis is very important, I truly believe the most important aspect and component of trading is being able to identify market conditions in live time, right? So we're going to be breaking that down, going through all of it. Before we get in and go any further, right, go and check out my Instagram, High Performance Trader, right? I post tons of daily tips, tricks, market resources, right, to get in and out of the market. This is my only Instagram, right? We break down lessons, testimonials from everybody that's involved in the course, in the Discord, right? Everything's going very well. We're putting in the work, right? And I truly believe in building a team that really focuses and prioritizes accountability, right? Because responsibility and accountability are the two main components of holding yourself accountable to making the correct decisions in the market, right? So come check that out. I offer a full extensive course, right, on pretty much A through Z, getting in and out of the market successfully, right? We break down price and volume analysis, chart patterns. We break down process development, right? A systematic daily process of getting in and out of the market successfully. And I also break down market psychology, right? Which is a very, if not the most important aspect of becoming successful, right? And I also break down having a probabilistic mentality, trading on a series of trades, not trade by trade basis, right? So once again, there's so much different information that comes at you constantly in the market. And also, before I go any further, right now we are offering a 1 free week on the Discord if you subscribe, right, to the premium members, right? So I have 3 different memberships that you can join, right? But more importantly, any of them right now for 1 week are free, so you can get involved in the community, see if you like it. You have absolutely nothing to risk, right? Completely no strings attached. You can join even if you just want a week free. You can cancel, that's completely fine. I truly believe in offering the best trading resources for all the traders out there, right, in building this team. So let's break into this lesson. So like I said, the purpose of this lesson is to highlight simplicity, right? So the market is a very unstructured environment, like we said. Buyers and sellers always battling over price. There's tons of different components. There's volume. There's just all these different patterns that we need to be able to identify, so on and so forth. So I see a lot of traders overcomplicating the process, right? So very important, right? The main component, like I said earlier in this video, is being able to identify market conditions, right? And basically what that means is who's in control. Is it buyers or is it sellers, right? Or are they battling, right? And the way we do this is by highlighting and identifying areas of value. So everybody knows that I am a supply and demand trader, right? But more importantly, or more specifically, I like to call it areas of value, areas of interest, areas that I'm looking for the market to make specific moves, right? I truly believe, right, that because a lot of traders ask me, right, they go, how do you draw your supply and demand zone so like how do you make them so on point, right? How are they so accurate? And in reality, right, what I'm trying to do with these zones or domains or areas is highlight a specific area on this graph where I'm expecting a high probability market reversal, a move. I'm looking for smart money to jump in and out of the market in these areas, right? Are they always going to be perfect? Absolutely not. Do I want them to be perfect? Absolutely not. Because remember, the main goal here is just to remain in a state of mind of objectivity, right? So I'm sure every trader out there listening to this has had days, right, where every single day they were looking for the market to go up, right? They're looking for it to go up. They're looking for it to go up. They're buying any reversal that they think might happen, and then they could just get eaten alive by sellers, right? Or vice versa. You keep thinking it's going to go down. You keep thinking it's going to go down, and buyers just keep overpowering, right? So basically what that stems from is your ability to accept that you are not correct, right? So you have to, going forward, you have to have the mindset that you don't have to be correct to make money, right? Mark Douglas breaks this down extensively in both of his books, right? You do not have to be correct to make a good trade. All what you need to do is be able to click your mouse or scan your face on your phone to get in a trade, right? And the rest is pretty much random, right? But this is where the paradox lies, right? So in a random environment, right, we find these specific patterns, right, that are selective, right? They're selective human behaviors, right? And they become predictable. And out of 10 times they work, let's say 70 or 80, right? And that's where we find our conviction, right? That's how we build our conviction, our confidence, and our setups. That's why it is very important to log your material, right? You must log your trades. You must know exactly which trades work best for you, which don't, right? So I really over here, and I highlight them all in the Discord, because every single day I log and recreate all my favorite trades. So you come over here on the Discord in trading metrics, we have 1, 2, 3, 4, 5, 6, 7, 8 different setups that I trade every single day, right? Supply, demand, rejection, which is basically a double top, right? Double top drop, and then a demand rejection is a double bottom pop, right? Where we're looking for a double bottom and then a pop. And so an end of day rejection, where when price battles over end of day, I'm looking for a buyer or seller to show strength here and defend it, right? So basically going back to these areas of value. All what I'm looking for every single day are areas to get in and out of the market that have a higher probability of success for a reversal or a continuation. That is our edge, right? So once you've have observed the market context, right? And I'm just gonna break down my 5 steps of making successful trades, right? And this is in the course, we break this down extensively, right? But so 1 is observe market context, right? So what does that mean? That means understanding what is the general trend of the market. And there's a little more than that, right? Is it volatile, right? Is it balanced, or is it imbalanced, right? So observe market context, right? So basically in a nutshell, we've had this bounce off of demand, right? On the QQQ, on the daily time frame. I always start on the daily time frame to get a general understanding of what is happening on a larger time frame, because larger time frames hold more weight. You want to trade with trend, so on and so forth. So we get this nice rip out of 261.05, right? And then we rip all the way up to 313.68. So if you draw your Fibonacci retracement here, you can see we are getting this bounce off 286.79, and this was Monday. So once we got this bounce Monday, the way I'm looking at market context here is that buyers are stepping up. Buyers are in control, right? And you can see Monday, Tuesday, Wednesday, Thursday, Friday, 4 days out of the week, buyers were completely in control, right? Market absolutely ripped this last week, making higher highs, making lower highs, so on and so forth. So you see how we identified the market context there. Number 2, right, is identify your areas of value. That's supply, demand, pre-market high, pre-market low, which are supply and demand zones, right? So once again, don't get too specific here. Identify your areas of value. What are areas of value? These are areas that I'm looking for high probability market reversals. Well, how do I identify them? Based on prior price performance, right? So what does that actually mean? That means the last time price was at 309, we got sellers, right? And let's check it out. So over here, 309, right? We got a sell-off all the way down to 285, right? A massive sell-off. So that's telling me, based on the last time price was at 309, sellers were strong. So going into Friday, if sellers can show up at 309, I'm going short. Bingo. What happened? We got some sellers, we got some volume, took her down. Double bottom drop, baby. See, this is how you identify and get in and out of the market, right? So number 2 was identify areas of value. Number 3 is identify a chart pattern volume or a candlestick rejection in this area, indicating smart money has showed up to the scene, right? And this is what we do every single day. It becomes systematic. It becomes very easy, right? Running through this process once you do it enough, right? And just a quick little breakdown. Price literally came up into 309.15. Let's see what the high was on that other candlestick real quick. So right here, the high was 309.27. So look, I literally put a resistance here of 309.29, drew a supply zone, right? And that was it. So comes right into that area and rejects. And let me just show you, right, what we put in the pre-market plan here, right? Because the Discord is very powerful source for every single trader. And this is the reason why. So you can see here, QQQ, every single day I post a bullish and bearish scenario, right? Because the main goal here, remember, is to be able to identify market conditions. And you cannot identify market conditions if you only identify one scenario. You must identify both scenarios so that you could be prepared for whatever happens in live time. Get where I'm going here? So if you're only focused on those buyers, you're only going to see those green candles and you're going to get eaten alive, right? Like we talked about earlier. But if you identify a bullish and bearish scenario based on supply and demand, you will be able to get in and out of the market successfully. And I'm going to break down how we did that both ways on Friday. So first is our bearish scenario, looking for sellers to defend 308 supply. Strong supply zone from 216, right? Look at this. Not expecting this to be an easy zone, right? Not expecting this to be an easy zone for buyers to fly past. If sellers show up, chart pattern, volume, basing candle, let's target 300 demand from yesterday, right? So basically from 216, right, which is right here, massive sell-off, right? So once again, we're looking for buyers to step up here. Oh, and another thing I do every single day is I put a graphical presentation, right, highlighting the areas I'm looking to trade, right? So what happened? Price literally rips in there. We identify the candlestick rejection with volume, right? And we take her short, right? Number 4, predefined stop loss. Well, number 4 is basically your target. This right here, number 3 is your entry. Number 4 is your target. So in this case is your target and your predefined stop, right? Because if you do not have a stop loss, right, you're going to get hurt if it does not go your way, right? And basically capture the market imbalance. So basically in the pre-market plan, we put a general entry and target, because once again, I do not like to be too specific, because once you get so specific, that just increases your probability of making errors and then damaging your mental capital, right? So you don't want to do that. You want a general idea of capturing a market imbalance, right? And that's exactly what happened. So I don't care if you took this down to VWAP, that would have been successful. I don't care if you took this down to demand from open, that would have been successful, right? But the what I ended up going for, right, was this area of, this key area of 303.22, which was perfectly fine, and that's okay, right? So that was the first setup for the day, right? Now the second setup, right, and I'm going to break this down, the bullish scenario on QQQ was looking for buyers to defend 303.50 demand. This is a strong level of support. You can see it used to be resistance back on 3.6, right? Buyers show up here with strength, basing candle, chart pattern, volume. Let's go long, targeting end of day, then potentially 308 supply, right? So what happened and why did we find that area? So you can see here, you pull this up on the daily. This 303.50 area was an extreme area of value and concern because we got a massive sell-off there. We got a rejection there, right here, right? And then price rips up above it and then comes down, and now I'm looking to retest it. So since sellers showed up here at 309, this is a strong area, right? The break and retest, we've now broken structure. Now we're gonna come down and retest it and see if buyers are still there. Let's see what happened. So sellers come in, right? We come right down into this area, down to the T, 303.22. The low on this candle was 303.37. Once again, not being specific, but we are now prepared for buyers to step up in here to target end of day. That's exactly what happened, ladies and gentlemen. And listen, overall, all what I'm doing here is identifying my areas of value and identifying chart patterns in those zones and taking profits, right? So number 4 is your exit, right? Number 5, most important component of all this is log your trades, right? The sooner you start to log your trades, the sooner you will build conviction. Extremely important, right, to build conviction, understand your probabilities of success, understand how much money you're actually making and how much you're losing, so you can now grade yourself and start to make progress. You cannot make progress in something that you do not measure, right? Very important stuff. So let's just run through it one more time. The systematic process, right? Number 1 is observe your market conditions, right? Number 2 is identify your areas of value, right? Number 3 is identify your chart pattern and or volume or candlestick rejection in these areas of value, right? Number 4 is your target, your stop loss, right? The market imbalance, right? Your trade plan. And number 5 is log your material. Ladies and gentlemen, Joshua Salvetti, I really hope you enjoyed this video, right? This is how I get in and out of the market daily, right? If you are interested in getting involved in the Discord, hit the link above, check out my website, right? I'm offering 1 free week, and I also have a course, right? One-time purchase of the course, you get access to the Discord for a full free year, right? That includes like talking, one-on-one mentorship. I am here for everybody, right? Because I truly believe in the power of accountability, right? Get involved. I'll see you there.